everybody, and welcome to the 35th edition of LM's Weekly Wrap, our weekly program to cover all the market related developments. This week has been a very, very volatile week of sorts. It started off with certain statements coming that if there has been a 500 basis points hike in the interest rates, that is about with the interest rates now hovering at 5% in the US markets, there's definitely some casualties waiting to happen somewhere. And like a kind of prophecy which was being fulfilled, we saw a lot of regional banks kind of collapsing like a pack of cards in the US. So after that we saw the contagion spread to the European markets, and of course our markets were also not immune to all these developments. We saw developments across the board and a kind of knee-jerk reaction as far as the markets were concerned. So I think with me is Jash. He'll be briefing us and giving us more insights into what happened at the global level as well as the domestic markets, which will be followed by the sectoral outlook from my side. Welcome, Jash.
Thank you, sir.
Kindly take us ahead.
Yes. Thank you, sir. I'll be starting with the Nifty levels. We are at crucial 17,000 levels today. We had gone below 17,000, but it has somewhat bounced back today. We'll know the reason in the due course. I'm going to start. Next, I'm going to take over the US markets. We saw SVB, the Silicon Valley Bank, almost collapsing out there, and its Europe business was bought over by a London bank for £1. I think that made the news, and that caused shock all over the world. There was huge fears on all the other banking entities because of the rapid increase in the rate of interest, which has led to this collapse. I think what the government is trying to do, they are trying to control the policies, the fiscal and monetary, but they want a soft landing. But as I had mentioned earlier in the videos, that they are not going to get a soft landing. Increasing the rates so vigorously has their own impact. Coming to the dollar index, it did cool off. The rupee has gotten stronger. This is all because of the rising interest rates. Now coming to the Fed. Fed still has their stance of increasing the rates, but not as aggressively, not at 50 basis points, but at 25 basis points. I feel it is still high, but because they are hell-bent on controlling the inflation over there. But they want to go back to 2% levels. Right now they are at about, I think, 5%. Right, I don't even see it going to 3.5% in the near future. I think following that, coming to India, RBI might take a pause now because India, the RBI can't afford to have such kind of interest rate hike scenario, and we need a soft landing, which remains true. So even if we increase, we won't increase to another 20 basis points. But according to our thinking, it should be about there should be a pause over there. Now it's a wait and watch. We have seen Dow plunging and how in the last 1 week, and the heat, we have seen the heat in the Indian markets also. The sentiments are very negative, but I've seen something. What I've noticed is the volumes. When the Nifty is being sold, the volume of the Nifty is not that high. So we don't know if the big institutions are selling, if there's a major sell-off or anything. That we'll have to wait and watch, because if there is some kind of buying, even small buying backed by numbers, if there's volume, then we'll see a very quick recovery. But we cannot say anything now. This is just an observation from my end. It is open for we need to wait and watch for that as well. I think that's about the Nifty levels and the global and the domestic scenario. I'll hand over to Nirav sir now. Thank you.
Thank you, Jash. So good inputs as far as the global markets are concerned. One important point to mention is that with interest rates at 5% in US, and we are seeing that there is an increasing appetite towards risk-free interest income, especially when a lot of stocks have not gone anywhere in the last couple of years. This is the first factor. Second important factor is with interest rates ruling at 5%, a lot of financial institutions or the regional banks were such whose business model was centered around zero interest rates. So they could survive only if there is a zero interest rate environment, which is definitely not going to happen. And now the third important factor is that the regional banks and the banks taken together in US are sitting on treasury losses to the tune of $600 billion. Now all these banks had scooped up treasuries and bonds at a time when there was a zero interest rate scenario. Now all these bonds and treasuries have become kind of junk, and these banks want to liquidate them. This is what exactly happened with SVB, Silicon Valley Bank. They tried to liquidate that stock and it is junk. So there is panic in the market. So there is a mad scramble for funds. So what has happened is that Fed has opened the emergency window, and under this emergency window, $165 billion has already been lapped up by the banks, which is known as the backstop financing. So I think this is one angle, and now those experts in the global markets who had predicted the crash of 2008 have given certain stunning observations. The first observation is what we just discussed. The second observation is that in all likelihood we will see the February and March jobs data, which will be weak because there is a hiring outlook is very, very weak in the US markets. And after that you will see an S&P 500 downgrade, earnings downgrade, which will come, and that will be the trigger point where the market will correct significantly. So this is a prophecy which is we have to see whether this turns out to be true or not, but S&P 500 downgrade is the next step which these experts have predicted, and they have indicated that next 60 days are going to be very, very crucial for the markets. If there is a fall in the markets, if there is a crash in the market, it will take at least a couple of years to recover from this till 2025. So all this paints a very grim scenario as far as the US markets are concerned. This has spread to the European markets as well. We have seen Credit Suisse. Credit Suisse is a far bigger problem, at least as far as the emerging markets also are concerned. So the problems are spread everywhere, and I think our markets are more in a wait and watch mode because they want to understand the magnitude of the problem. Obviously, the severity of the problem is such that it's very difficult to take a call at this point of time how the things are going to play out. So yesterday we had the European Central Bank hike rates by 50 basis points. Now all eyes are on the Federal Reserve meeting, which is on 22nd of March. The commentary over there, the outlook over there is going to be very, very critical as far as the markets are concerned. Having said that, today China
I would like to say 2 points. China has increased their
they have decreased the rate.
Decreased the rate by 25 basis points.
And that has given a fillip to metal stocks today. So,
metal has been strong today, definitely.
Because loose monetary policy definitely is a positive as far as the metal stocks are concerned. So going back to
coming to the Indian, I forgot to mention a very important point is that today why the market went up is we had the FTSE rebalancing, and by the sources in the public domain we are seeing a $450 million inflow. And that is what has led to a kind of up move in the market today.
Yeah, the FTSE rebalancing essentially took place in the last hour of trade. That's why we saw some momentum in the market.
Right. So I think that caused kind of a slight excitement to the investors for sure.
Yes. So I think it will be a wait and watch situation. Coming to the different sectors, starting off with auto, I think auto continues to be weak. We've seen Mahindra & Mahindra, Eicher Motors under pressure during this week. Maruti also to a certain extent has been under pressure. Hero MotoCorp under pressure because Honda motorcycle has entered into the 100cc domain area. Auto ancillaries continues to do well, and this week I think we had some block deals happening in Sona BLW, Motherson, Samvardhana Motherson, and we had a listing also of a new company in this space, and a good appetite for the stock post listing. While the listing was muted for Divgi Torque, but I think we did see good fund action over there. So that is there. After this, we have capital goods. Capital goods continues to do quite well. We have railways and defense which continue to do well. This week, our couple of weekender stocks, which is Ramkrishna Forge and Titagar Wagons, both have done exceptionally well. They have bagged, the consortium has bagged the order for their forged wheels. So I think it's a positive development for both the stocks. As far as infrastructure is concerned, infrastructure continues to do well on the back of strong order book. FMCG sector continues to play a defensive bet. We have pharma, which is under a lot of pressure. We are seeing a lot of pharma companies at their 52-week lows. We have metals, which has been very, very volatile in trade. I think today, as we just mentioned, it went up on account of the Chinese factor. But I think we have Hindalco, Nalco, Vedanta, which has been under tremendous pressure in the market. So metals have been reeling under pressure. IT, I think the unexpected developments at TCS, definitely the timing, very it's ill-chosen timing, but of course these are something, the factors which we cannot control. But I think the resignation of the CEO is quite ill-timed and could have an overhang on the stock in the near term. So that is as far as the IT sector is concerned. And rest, I think Reliance has been under tremendous pressure. It's going in tandem with the US markets, how the US markets are behaving. Every day it has been touching a 52-week low. So I think Reliance is something to watch out for. And we saw, amongst all this negative news, we saw one ray of hope from DLF. They have clocked sales of 8,000 crores in just 3 days for their prestigious luxury project. So I think 1,137 flats being sold at average price of 7 crores. That I think is a very positive development. So I think that kind of sums up our session. Caution is the buzzword.
So just before you end, I would like to put a point forth. I would like to ask you, don't you think India is slightly more resilient than the world economy right now?
We are
like the initial,
Yes, we are definitely more resilient because of several factors. One, because we have been able to manage this crisis very well. Secondly, the food security is very high. Third, we have been able to make our fuel arrangements quite well. Plus we have the IT sector, which is quite strong, so the export earnings have been quite good. So overall we've been able to manage pretty well the entire turmoil which is there in the global scenario. We've managed very well, but if there is a global meltdown, then I think we are in a globalized world.
Yeah, we are in a globalized world.
We will definitely be impacted. So I think that is one of the reasons why markets are still in the wait and watch mode.
I think this gives a lot of confidence to the investors that despite a global meltdown, we are still in wait and watch. Yeah, of course, you've corrected about 10% in the last few months.
One important factor is the agri.
Correct. We are independent.
If the agri this year, if there's an El Nino, which generally we tend to see El Nino every 5 years.
Correct.
Every 5th year, that's been the average. Going by that, this year should be an El Nino. So if that is the case, then I think that is one cause of concern.
I agree, but what we have read and what we have understood, the analysts, because we are in a negative sentiment, the analysts have already extrapolated the negative, more than the negative of what we should. So I think we are more than prepared for El Nino.
That is one side.
One side of it, of course.
I'll just say this is what we are trying to predict.
Exactly. We don't know the reality.
In the last 1 month, there has been a lot of unseasonal rains.
Exactly.
There has been a lot of cold weather. There has been ice, rains across snow. In those areas which were hitherto never impacted to this kind of weather pattern.
So climate change is real, of course.
Climate change is for real. So we have to take into account all these factors. But nonetheless,
but I still feel that we are poised much better in the world, and that gives a very good confidence to investors who are long term buyers, and I think they should start investing at this point, and they should invest in a staggered manner, because the amount you invest right now, and if we are managing the global crisis this well, I can only imagine what will happen once the world is out of the crisis, and at what levels our market can reach in the future. So please look out to that and start investment planning, or start taking advice from your financial planners where to allocate your money.
Yeah, that's the crux, that when you invest, you essentially invest for the medium to long term. So
Yes.
that's the whole idea of
Correct.
investing. But short-term volatilities and triggers do remain. So our job is to caution against all these things.
That's why they have to go to the financial planners and take the correct advice.
Yes.
Yeah.
So I think next week will be very crucial. So we hope to get back to you very soon. In the meantime, you can write to us with your feedback and comments. And that's about all from my side. Jash.
Thank you everyone, and please hit the like, share, subscribe button to know from us and more information on the markets every week. Thank you.
Thank you very much.